When somebody says Forex market, now what is this market altogether? Where is this market, right? Now, there are two important distinctions you should make, two categorizations, I would say. One, Forex market as a OTC or over-the-counter market. Over-the-counter market meaning that people negotiate trades bilaterally between two counterparties. There is no central exchange, right? That is OTC, over-the-counter. Now, in Forex markets, over-the-counter represents almost 95 to 97% of the volumes. That means for all practical purposes, when somebody says FX market, the FX market is an over-the-counter market between banks and companies, banks and funds, banks and brokers, and so on and so forth. So it is primarily driven by banks. Now, there are exchanges like Chicago Mercantile Exchange, CME, right? Then even in India, for example, NSE has a currency segment where there are trades which happen. But compared to the global volumes in the FX market, these particular exchange-driven, exchange-traded market is very limited, right? It still is I would say less than 5% of the volumes, even less than that actually. So the market structure, when somebody says Forex market, primarily it is to do with OTC. Now, what do you mean by OTC market? OTC market, typically, first level, the topmost level are the banks. Banks meaning primarily the global banks. When it comes to global currencies like Euro dollar or dollar JPY, dollar yen, Japanese yen, the British pound to dollar, most of the global currencies, right, are primarily traded by the major banks like JP Morgan or big banks, basically JP Morgan, Citibank, and so on and so forth. Like all these very big banks, they are the primary players, right? They are the ones who provide liquidity to the market, right? That's the first layer. Now, obviously, these banks are interacting with each other, right? They're interacting with each other directly through phones, through dealing systems, and so on and so forth. And that's how they negotiate the trades with each other and close the deals, right? And obviously, there are brokers in between. The brokers help the banks match the quotes from different banks, right? So brokers are there in between banks and helping them trade with each other. And of course, there are other systems like EBS. EBS is a market system rather, trading system, which is actually, which enables various entities to actually trade with each other. So there are these systems are also available. So these form the second layer. The top layer is the bank, and then the brokers, EBS, all these kind of systems, they form the second layer. And then another third layer is basically the non-bank companies, like for example, major corporates who are exporting, importing, and they have requirements of currencies. Similarly, money exchangers, right? Professional money exchangers who actually exchange currencies for both retail and companies, right? Then there are mutual funds, hedge funds who trade currencies. So they are all users of this market. They actually are, of course, some of them could, for small purposes, they could also trade, right? They could also provide rates like banks do, but very minuscule. They all directly come to the banks in some form or other. Ultimately, the banks are the liquidity providers in the Forex market. That is something which you have to keep in mind, right? Ultimately, it boils down to the major banks. And then in each country, there are local banks. For example, in India, State Bank of India, or most of the Indian banks, the ICICIs of the world, all these Indian banks also do provide liquidity. They do trading in the market. They do provide quotations for the exchange rates, and they trade, right? So each country obviously has its own banks. Local currencies are traded, but the global currencies are typically traded by almost all the banks. The major banks take the lion's share of the market. That's how the market is structured. And then on top of all of this, you have central banks like the Federal Reserve, the RBI, the ECB. Right? They are also regulators of this market. So they do regulations. So they provide what can you do, what can't you do. They international systems which enable settlement between different accounts. All of them, they are set up through some regulations. So there are regulators who oversee all of these aspects. Right? This is the structure of the Forex market, basically. So when we say Forex market, we mean this market. Of course, there are exchanges like, as I said, CME. In India, NSE has dollar rupee based instruments which are traded in the market. For example, in CME, there are euro dollar futures, there are currency options, and all of them available, right? Similarly, in most of the SGX in Singapore or China, Shanghai Exchange, in Dubai, then and so on and so forth, right? ICE exchange and all of these exchanges also have currency contracts. They do have trading. People do trade, but the volumes are way lower than the interbank kind of a market. Right? This is how the structure is. And once the banks also do trading among themselves, right? The settlement happens again through something called clearing houses. Now, we are not getting into that concept right now. When we discuss more into equities and so on, there we will detail, more into what are clearing houses, what do they do generally and so on. So, but the point is, there are clearing houses available where even in between banks also, instead of settling with each other, they route it through a clearing house, which kind of settles all the payments and receipts in different currencies and so on and so forth. So these are all the players available. For all practical purposes, it's an interbank market, right? Mediated by brokers and electronic systems. And various electronic trading systems are available in the market. In India, there is something called Reuters, the definitive D2, D3 dealing systems. EBS is a very popular system globally. These are all systems available with the banks also have their own systems. They give it to their clients like companies, funds, and so on for them to directly access the bank and trade with the bank. So all these are available, but the primary liquidity providers are the banks.